Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. You know, there's been talk recently that Warren Buffett's strategy of buying stocks to hold for a number of years is just no longer viable due to all of the extreme levels of market volatility. Well, we'll find out what our panelists think about that concept as we discuss it with Editor-at-Large Steve Reitmeister, our senior market analyst Charles Rotblunt, and top stock screener for Zacks, Kevin Matras, all here at the round table. So I guess that's the first question. Is buy and hold investing dead? I mean, some people are looking at it as an antiquated method of getting into the stock market and staying there.
Yeah, this is a topic that you and I have gone over a couple times with the Investing the Zacks Way sessions. And, I mean, buy and hold, which means long-term investing, that will never go away. There will still be people who want to buy attractive companies, hold them for a long period of time. But the idea of buy and forget, okay, or just put your money in the market and that's always the best ride, there's times when that's just simply not true. And when we talked about the market outlook for the year and other previous pieces, we showed how there's really like these 15 to 20-year cycles in the market where it can be incredibly bullish for a 15 to 20-year cycle, as we saw from 1982 to 2000. But there's also historically very dead periods of time, like from 1966 to 1982. That period, basically from the beginning to the end, in 20 years, ended up about the same place it started. It went up and down in the years in between, but it ended up nowhere. So the thing is, there are times during the bullish phases where, yes, buying and holding just about anything will work. But we're in this bearish cycle right now where buying and holding anything will not work. You have to be selective. And what you select, you do have to monitor to make sure that its fundamentals are still sound, that there's a reason to be investing in it.
And you bring up a good point. Do investors need clarity on buy and hold versus buy and forget?
Well, I think that's the key point, and I think the biggest thing investors make, the biggest mistake investors make when they're looking at stocks, is that they try to basically buy and forget instead of really taking a notebook. And I brought this with me. This is what I actually use to manage our Zacks Elite portfolios. $3 at Target. When you buy a stock, just write down the reason you bought it. Mm-hmm. Rising earnings estimates, business is doing good. Whatever the reasons you bought the stock, write it down, and then every so often take a look at the stock. Does that reason still apply? And investors cannot buy and forget. There's nothing wrong with buy and hold, but you need to be proactive, and that means you need to constantly monitor the stock's earnings estimates, monitoring the quarterly reports, see how business is doing. And if the reasons you bought the stock no longer apply, sell it. And it doesn't matter if you held a stock 1 month or 5 years. You hold it until the reasons you bought it no longer apply. And I think that's the big key for investors. They can't think as buying and holding as not being proactive. If you don't want to be proactive, plenty of good index funds. Just find the lowest cost index fund you can find, and then you buy it, and then you forget about it. But if you want to own stocks, you're an owner in the company, and therefore you need to stay on top of what the company is doing and how well that business is being run.
It's a good point. You've got the visual there, too, because you've got that picture right in front of you as to why you bought that stock at any given time. Didn't you write about something that relates to this on Zacks Elite recently?
No, I did, and we're actually going to touch on this a little bit later in the video, but we did talk about, I wanted to talk about turnover real quickly before we jump to Kevin. I think in this market, people tend to think, I've only held the stock for 6 months or 9 months. Turnover really relates to how quickly conditions change, and when conditions change more rapidly, people need to act quicker. And a perfect example is Zacks Elite. In January, we bought Multi-Fine Line Electronics. Company raised estimates, said it's buying back 9% of its shares. Everything's really great. We bought the stock with the intent of hopefully we can buy it now. It's doing well. When the economy recovers, the stock will just go up that much longer. A month later, they came out with their earnings call, said that they're starting to see things in their business trends that are worrying them. I have no idea what happened in a month's time to really get them to change their view, but we sold the stock. We took a quick profit. Our intent was to hold the stock for at least a year, but this is a perfect example where the reasons we bought the stock no longer applied, so we sold it. I did get some emails from some people asking, why are you trading stocks? And it wasn't that we were intending to do a trade. It's just that we had to react to whether the conditions were. And I think the thing for buy and hold investors, they need to understand conditions do change. And when they do change, they need to be proactive and make whatever changes to the portfolio are required.
And you don't own that stock yourself, right?
No, I do not.
Okay. Kevin, what do you think? Buy and hold, buy and forget, trade?
I mean, buying and forgetting, I just don't think it's the appropriate strategy for right now. And really...
Was it ever?
I don't know. I mean, I would say no, because if you were to look at, if let's say you employed a buy and hold strategy for all of the stocks in the S&P over the last 10 years, you'd be underwater. There is not a single person who could have employed a buy and hold strategy, assuming you tried to replicate the index, the S&P 500. You'd have to go back 12 or 15 years to be able to finally show any kind of return. Then if you were to somehow annualize that return, you're talking about a mediocre single-digit return. So I just don't think that is the way that you're going to be able to beat the market. People think that you can just buy it and forget it, and that's how you're going to get rich. Sadly, I think the stories about how if you bought Microsoft 30 years ago or Apple 30 years ago, that is how you could have been a millionaire many times over. That's what keeps this kind of strategy alive. Last year, all of the oil service stocks were going straight up. Everybody thought this is going to be the new thing. Oil's going to go to $200, maybe $300. You buy an oil company stock, and that is your way to riches. But if you were to look at all of those, or I should say the overwhelming majority of those oil service stocks, those things are selling at a fraction of what they were selling at last year, and you'd be underwater on that. Fertilizers, right? Food was the big thing, shipping companies. So you need to be flexible, and you need to look at the industries that are flashing the strength, but eventually those industries that are showing the strength are going to be rotated out of, and a new leadership is going to be determined.
So what advice do we have? You want to add something to that?
I was just going to say that we always go into a trade with the best of intentions. The one that you're talking about, you thought this was that the company was showing great fundamentals. There was a reason to be in it for a year. But when it changed, you don't say, oh, well, I'll just stay in it and see what happens. No, that's a failed philosophy, has always been a failed philosophy. But right now, you need that flexibility. Right. What is the reason that I went into this stock? Okay. Does that still make sense? Are the earnings estimates still going up? Are the fundamentals still strong? Is it still a decent value? Sometimes you sell out because everything did go your way, and the stock fully rose in value, and now it's getting a little overpriced. And like, hey, no one ever got poor selling a stock for a profit. Okay, so you take the money off the table. If that happens in 3 months, terrific. If it takes 3 years, that's fine too. Right. But whenever the story no longer is attractive, or the one that I love, my father always said to me, he goes, ask yourself, if you had fresh money today, would you put more money in that stock? If the answer is no, okay, then what you're saying to yourself is you don't like the upside potential. Right. So that stock that you own that you wouldn't put more money into, you got to sell it because where is it going to be going up, right? So that case for buying, if it no longer exists, it's got to go,
right? No
matter how long.
And that's what I want to think. Kevin mentioned on food, and long term, I'm extremely bullish on food, especially the fertilizer stocks. But there's a time and a place for everything. Right. And right now, when you're seeing estimates being cut, when you're seeing commodity prices going down, that's not a sign you should be buying or holding on to your stock. Especially with commodity-related stocks, conditions change. And so even if you like the long-term, the 5, 10, 15-year outlook for a company, it doesn't mean that over a short period, say 6 to 18 months, you should be holding the stock. You can always sell it, get out of it, wait for conditions to improve, and get back in it. You can be a buy and hold investor and still actively manage your portfolio.
Right. So, all right, so there has to be a reason for getting into a stock. We've got the notebook from Target. Another piece
you
of
can
advice.
buy another store. It has to be from Target. Yeah.
I think Walmart carries it too.
Some other pieces of advice, real quick, for our longer-term investors out there.
It's fine to hold on for the long haul, but here, just summing up, I think what pretty much all of us have been saying. Are the fundamentals still intact? The earnings estimate still going up? And is the valuation reasonable? If so, hold on for as long as you want. Once it changes, you got to go.
Anything to add?
I think the biggest thing is that investors need to realize they're business owners. And as business owners, they need to stay on top of what's going on in the business.
All right, we're going to give you the final word.
I would say just when you're buying a stock, just know you're buying it because eventually you're going to be selling it. So start thinking about what would have to happen in order for me to sell it. What would have to happen in order for me to pull it out at a profit? And what would have to happen if this turns against me? What would have to happen for me to get out of this thing, cut my losses, and move on to something else?
All right, so apparently there is still a place in the investing world for buy and hold if it makes sense as a strategy for the individual investor. If you're accessing this outside of Zacks.com, you're going to want to get over to our homepage and check out all of the other valuable commentary that we have on Zacks.com, all there just for the asking. With everybody here at the Roundtable, I'm Terry Ruffalo.